In this video, I'm going to show you how to get approved for a business loan with bad credit. If you find this video helpful, please drop a like and subscribe. In saying that, let's just jump straight into the video. Alright, so I've outlined a few steps you need to take. So I've got about 11 different ways to help you improve your bad credit and getting approved for a business loan. Alright, so step number one here, improve your credit score if possible. So check your credit report, review your personal and business credit reports to identify any errors and correct them. Pay off debts. So paying down existing debts can help boost your credit score and establish a payment history. So if time allows, focus on consistently paying off the bills and credit obligations on time to gradually improve your credit. Number two here is offer collateral. So secured loans. Lenders are more likely to approve a loan if you offer valuable collateral, for example, property, equipment, or inventory to reduce their risk. Be cautious as the collateral could be seized if you default on the loan. Provide a solid business plan. So a detailed business plan can offset concerns about bad credit. Outline how you plan to use the loan, your cash flow projections, and how you intend to repay them. Show that your business has strong potential for profitability despite your credit history. Also look for alternative lenders. So online lenders. Many online lenders specialize in providing loans to businesses owners with bad credit. While interest rates might be higher, they tend to be more flexible. Micro lenders, so organizations like non-for-profit, community-based lenders, or the SBA microloan program offer small loans to businesses with less stringent credit requirements. Merchant cash advances, so these provide an advance on future sales. Though easy to qualify for, these come with high fees and should be used carefully. Apply for a smaller loan. So if your credit score is low, applying for a smaller loan might increase your chances of approval. Smaller amounts are less risky for lenders, and repaying the loan on time can help build your credit profile. You can also use a co-signer or guarantor. So if you have a business partner or someone with good credit who is willing to co-sign or guarantee the loan, it can improve the chances of the approval. The co-signer takes on the responsibility for the repayment if you default though. Consider invoice financing or factoring. So if your business has outstanding invoices, you can always use invoice financing or factoring to get immediate cash. This option allows you to borrow money based on your outstanding invoices, which acts as collateral. Crowdfunding or peer-to-peer lending. So crowdfunding platforms like Kickstarter, GoFundMe, or Indiegogo allow you to raise money from multiple people in exchange for rewards or equity in your business. Peer-to-peer lending. Websites like Lending Club and Funding Circle match borrowers with individual lenders. These platforms may have more flexible credit requirements. You can also seek help from community banks or credit unions. So smaller local banks or credit unions may be more understanding and flexible when it comes to small businesses with poor credit. They often take more personalized approach than large financial solutions institutions. Use business credit instead of personal credit. So separate your business and personal finances by building your business credit. You may be able to qualify for a business credit card, line of credit, or loan based on your business's performance, not your personal credit score. And SBA loan program. So Small Business Administration, SBA offer loan program designed to help businesses with less than perfect credit. The SBA guarantees a portion of the loan, reducing the risk for lenders. While SBA loans can still be difficult to get with bad credit, they may offer more lenient terms than traditional lenders. So by following these 11 different steps, you can increase your chances of securing a business loan, even with bad credit, while being mindful of the terms and conditions as well.